After the famous cryptocurrency crash of 2017-2018, a compact double bottom highlights potential for a stable uptrend. However, it is important to consider the 500 to 425 range, offering a first obstacle even after the main downtrend lines were surpassed. The bearish range is compact enough to blur the boundary between a flat top forming a downswing area and a double top, though this is a small detail since the lower boundary is cleared and a valid descending trend line can be plotted. As the larger downtrend resumes, it is helpful to adjust earlier downtrend lines to account for the shallower slide. After a brief double bottom reversal, bullish sentiment remains to hold an uptrend that begins to intersect with the adjusted downtrend lines. Incidentally, this precisely marks the transition to a more significant uptrend as an ascending triangle begins its bullish break. The upper boundary of the ascending triangle was more accurately widened to factor in the larger downswing point in late 2018. In the event of a moderate correction, the ascending triangle's uptrend line now becomes a key feature to reference for support potential. The bullish reversal area in early June widens the lower boundary of a spread-out triple top under 154. The wide spread-out triple top range is delayed due to residual bullish sentiment represented by the upper incline and the widened lower boundary. Strong selling volume also found opposition from the temporary support that was a result of the ascending triangle's uptrend line. Interestingly, the old uptrend had a stable but aggressive phase in May. A minor inclined double bottom is in more of a continuation context of the larger uptrend in addition to reversing the smaller downswing from April. Residual influence from the old lower uptrend line is seen as it crosses through a large and volatile double top to begin 2020. This was a variant with a minor double bottom for the lower boundary. Interestingly, the lower 40s range reverses the double top drop and the earlier downtrend quite rapidly. This places it as an important long-term lower boundary. Price action is neatly contained in the highlighted areas to add validity to the reversal ranges despite increased volatility in and around them. All the previous ranges mark helpful guidelines in the eventual recovery, since they are the site of clear swing points and extended periods of flat trading.